Hello, everyone. Welcome to this first session of the Investor Insights series as part of our new content platform, The Core. I'm Thomas. I'm the head of startup and investor community at Hello Tomorrow, and I'm happy to be moderating this session. Before introducing our guest speakers today, I remind you that you have a chat on the right side of your screen where you can react to the discussion in real time. You can also start by saying like who you are, where you come from the beginning. And you also have a question tab where you can ask all your questions and you can upvote the questions from other people in the audience. We'll have around 45-minute discussion, and then I'll ask all of your questions to our speakers for the last 15 minutes. So without further ado, I'd like to introduce our three speakers today. So they are all experienced deep tech investors. First, I'll start with Anders Ferthett. He's the founding partner of Propagator Venture. He's based in Norway. Thank you very much for joining us today. Anders, can you tell us a bit about yourself and about Propagator?
Hello, so I'm Anders. As Thomas mentioned, I'm a founding partner of Propagator Ventures. Propagator Ventures is early stage deep tech fund, meaning that we often are the first investors in startups. We have a few focus areas, so machine learning, quantum computing, robotics, encryption, and materials. We launched Propagator Ventures in end of 2018. Myself, I have a background in physics. I did a PhD and a postdoc in condensed matter physics. After that, I've been in finance, more traditional investments for a long time. And in 2016, I sort of started to change into deep tech investments. That's the brief background about me and Propagator Ventures.
Thank you very much, Anders. Next, from San Francisco, we have Julia Davouri. Julia, you're a partner at Small World Group. Good morning, and thank you very much for being with us today. Can you say a few words about yourself and Small World Group?
Good morning. Thanks. I'm Julia. I'm with Small World Group, which is a seed fund, and I also work in association with Phoenix Venture Partners, which is a Series A and Series B fund. So we're based in the Bay Area, but we invest in North America, Singapore, and Europe. And we have a focus on sustainability and health, or people and planet health, if you want to put it that way. So we invest across, energy and water and mobility and advanced manufacturing, as well as life sciences and in medical technologies.
Thank you very much, Julia. And last but not least, we have Robert Garlenberger with us. Robert is from Munich and is a partner at B2V. Thank you very much for joining us, Robert. Can you say a few words about yourself?
Of course. Thank you, Thomas, for having me on your show. Robert, I'm a partner at B2V Partners. We're an early stage venture firm in the market for over 20 years, coming originally from Switzerland, investing today all across Europe and operating offices in St. Gallen, Switzerland, Munich, Berlin, and Luxembourg. We manage over 500 million assets under management. We operate different fund strategies, and we base ourselves on a very strong private investor network that often co-invests with our funds and acts as a strong asset with a lot of experience and networks connections for the entire B2V activity. I'm responsible with 3 other colleagues for our Industrial Technologies Fund, which is a 100 million early stage fund we raised in 2018. We invest, as the name suggests, on the entire industrial value chain, as well as in horizontal technologies like quantum computing, photonics, semiconductors, etc. Deploying initial tickets between 1 and 3 million euros, typically, also all across Europe. And we're based here in our Munich office.
Thank you very much, Robert. Now to kickstart the discussion and before maybe like diving deep into the world of VCs, my first question is about the timing of a first fundraising. A lot of deep tech startups start their journey with non-equity financing with grants. So what do you think is the right time for an early stage deep tech ventures to raise their first round? Julia, maybe what are your thoughts on that?
Yeah, I would say there is no set formula. It's going, heavily to depend on your startup and the verticals that you're in. It's going to depend on the funding that you've already had from non-dilutive sources, like Thomas said, whether that's grants or government funding. I guess if there is a formula, it's not too late and not too early. But it can also be never. That's a fine answer. You don't always have to raise from a venture capitalist. I guess not too early is because you always want to have, a plan set out in front of you with milestones, and you want to be able to raise an amount of money that's for typically 12 to 24 months and be able to achieve a specific set of milestones with that, where you can reach an inflection point and potentially raise again. You don't want to be too late where basically you're running out of cash and you only have 3 weeks, and it's going to be very tough finding investors at that point. But if there is maybe another thing to say about it, is the best source of money that you can have for your startup is from your customers. It's money that you're being paid for what you're delivering. That is the absolute best money you can have. Then it would be your own money. Then it's a bank money that's not too expensive. And then it's angels and VCs. So the most you can do upfront with your customers' money and your own money, basically the better for keeping equity in your own company. Thank you.
Robert, do you agree with that? And what do you do with? Do you have sometimes startups that contact you and you think that it's not the right timing for them to raise funds, like to raise equity funds? What is your view on all this?
Yeah, definitely agree with Julia. I think that the best funding option is no external equity funding, and building your business, maintaining 100% ownership, of course, I think straightforward. I think in our field, it's particularly important to think about the different sources of capital available, especially at the early stages, because valuation might still be lower than in the future. So you don't want to take up too much equity, but access other sources of financing. And particularly with a European perspective and with a deep tech perspective, I think these days a lot of alternative financing options, at least for the first steps, are available. Grants from the university or the research institute you come from, public grants, which are more and more geared towards deep tech, etc. And of course, then VC at some point becomes an option if you need more external equity financing. And without exaggerating, I would of course also add that we can hopefully, together with other VC investors over the lifetime of a company, add more than just capital, at least a little bit more than just capital. So maybe thinking about VC is also realizing that you need external help, that other people can bring additional things to the company you're building.
Thank you, and that's quite interesting. I mean, what you're saying also is that VCs can also bring more than just money. It's true that it's particularly for early stage startup and in deep tech, there are a lot of investors that are providing additional support to entrepreneurs. Maybe Anders, can you tell us, like, how do you work with the startup from your portfolio? How can you help them besides the money that you provide?
Well, especially at a very early stage, we usually do a lot of help hands-on. It could be anything from help with go-to-market strategy. It could be questions about hiring. Sometimes there are some sort of missing people or people that the team would like to put on to Often that could be commercially minded people if it's a heavy deep tech startup, and also advising in terms of how to structure financing rounds and when to raise money. I'd also like to mention in terms of the first round, sort of a lightweight option is to raise a safe note. Maybe that's especially popular in the US and North America, but I guess there are also alternatives in Europe. It could be a convertible note, and then you don't have the full process of an equity round straight off.
Thank you. Maybe Julia, do you have any other type of help that you can provide to startups from your portfolio?
Yeah, I mean, it's pretty similar in terms of advice, in terms of hiring, strategy. I guess, what we see, the two patterns is when an early stage deep tech startup starts to grow, they usually focus first on the technology, and we can help there. We can help them get ready for manufacturing. We have really good relationships with contract manufacturers, for example. And our team is deeply scientific. We had, the CTO of Flextronics on the team, the founder of Finisar in fiber optics. So we can really dive deep into what you're doing and help there. You might be spending years, trying to refine the technology, and then you have sometimes months and years looking for product market fit with your customers. You might be doing it when you're just thinking about the technology, but when it's really time to sell, your customer is going to say, well, actually, I wanted, I told you I wanted it red, but I want it blue, or I wanted it this big and I want it this big. And our goal is to help you go through those kind of two loops as fast as possible so you can really take off in your sales. So that's what we help with. And the second thing I'll add is we actually have a really deep network of corporates that work with us, that are investors into our funds, companies like 3M, like Pfizer, Corning, and others. And they've formed an ecosystem, and most of the companies that we invest in fall somewhere in that supply chain of the corporates that we have. So that's very helpful for us and for the startup and for the corporate to work together and figure out what hoops you're going to have to jump through to take off.
Okay, thank you. I guess it's shown that it's quite important to know what the investor, especially the first ones, can bring to your company. Maybe, Robert, do you have any additional advice on what to look for when selecting the funds that you should reach out to, in terms of, obviously, I guess you need to have a match in terms of focus, but also, like Julia mentioned, what help, like Julia and Anders mentioned, what help they can provide. Do you have any other advice to give to entrepreneurs on, which fund to choose?
Yeah, I think on a theoretical level, it's a good idea to understand the business model of the venture capital investor and look at things like fund size, portfolio distribution, how many portfolio companies does this fund manage, does this particular partner you may be talking to manage, and get an idea if you will get the bandwidth and the time that you're hoping for. You might have different expectations, but you should calibrate that with the reality of who sits on the other side. And most of this information is available. Not 100% of founders ask us those questions. How big is your fund? When was it raised? What's the lifetime? Can you prolong? How many portfolio companies are you managing? It's pretty straightforward questions. I would advise to ask them. And on a practical level, I'm always telling founders, take references on us as investors. I mean, we take a lot of references on you as a founder and as a company. I still don't understand why so few of the founders take references on us. Again, it's broadly available and public information, who we have invested in and with whom we're working together. So just ask us or approach those people directly, and you'll get a first-hand experience.
Yeah, I guess it's important to understand that it's not it's not a one-way relationship. I was talking with other investors who mentioned that investing in a startup is like a wedding, and you need to have both parties like have a good fit between both parties. And it's not only startups looking for investors willing to invest in them. It's also the other way around to make sure that both will benefit from the from this relationship. Something that I wanted to ask you is like when you know like which fund you want to contact, which could be a good match. Who do I need to contact? Maybe Robert, because you're from B2V, it's a bit bigger fund than Propagator and Small World Group, and so you have a more typical organizational structure. Can you tell us a bit about like who does what in a fund? What does like an associate, a principal, a partner, managing partner, venture partner, etc. And who would be the right contact to go for like a first contact with your fund?
We're happy to reveal some of our inner functioning. I'd be generally very cautious with titles in venture capital. My impression is there's a lot of title inflation in the market. And as soon as you start with things like venture partner, that can be so many different things. So I can't give you the definition that then works for the entire market. At B2B Partners, we have a pretty straightforward title schema. So of course, the funds are managed and the full responsibility lies with the partners, the ones who are the key man according to the contracts with the LPs who have invested in the fund. And we then have principal, investment manager, associate, and analyst. I'd be again very careful with general wisdoms of sort of always target the partner or always target the junior who manages the deal flow. I think funds are organized these days very differently, so you need to find out. And I can only talk about us, that we, of course, have different levels of financial engagement in our funds and different levels of historic experience in venture capital. But we internally all sit at the same table. So our deal flow meetings in the Industrial Technologies Fund at B2V, everybody is at the same table. We listen to everybody. And it pretty much depends on the topic and on the sort of emotional buy-in. If a more junior person is heavily pushing an investment or a more senior person. So you can't really attach that to titles, at least in our organization. But you should find out, I think, as an external, who is interested in your topic, who has the background, the ability, and also the motivation to really understand what you're doing, to understand the innovation, but also the business model and you as a team. And that's the one I would catch, because you need a champion on the other side, just as you need in a sales engagement. And I think it's much more important to find a real champion who is fully behind you than a certain person with a certain title.
Thank you very much. I think that's great advice. Maybe Anders, can you tell us about so Propagator? You're a smaller team. How does that work on your side?
Yeah. So we're as you mentioned, we're a small and agile team, but so we're 3 partners. And now we're expanding with a few associates. But I would I really liked Robert's answer in terms of, in general, try to find the person that you think would be the right match and that would understand and have understand your startup. And also it's always good to try to get a warm intro. That's always the best thing to do. So if you know a person that knows some of the people on my team, that's a good way to go forward.
Thank you. Can we dig a bit deeper now into the investment process? Can you tell us in a few words, like not going too deep in that, but like how long does it take? What are the main steps after first meeting with you? Maybe we can go on with you, Anders.
Well, what we would like to understand is the technology behind. We're very much science technology focused, so we spend a lot of time on that. Sometimes after a first meeting, we would often go on to ask for more technical information on the product. Then, of course, we have the usual, things that we do. We investigate the market, competitors. We do references, maybe contact potential customers. In terms of the time, that's depends a lot on on the maturity or the conviction we have on the startup. Sometimes we can have relationships that the first call was a year ago, and then it takes a year or even more before we invest. At other times it could be far shorter. And also to mention, we always, as we have very technical focus, we also always do expert tech DD review before any investment, either by using the devices that we have associated with Propagator, or some other experts in the field.
Thank you, Anders. Julia, is it the same process for you? And maybe another question, can you tell us a bit the difference, like what's a lead investor, a follower investors, and how do you position yourself? Do you always lead or not?
Yeah. So for the first question, yes, our process is quite similar in terms of what we look at. We put a lot of emphasis on getting to know you, because you may have patents, you may have great ideas, but really you just you have a team, and we want to make sure that you're the right team for us and we're the right team for you. Just like we were saying before, it's like a wedding. It's going to be a 5 to 10 year relationship. So our diligence process, when we get into diligence, it can take 4 to 8 weeks, I would say, on average. But there's usually weeks and months, and sometimes even up to a couple of years, where we just get to know each other. And that's a really important part. And I would encourage you to get to know VCs before you even have to raise, so that you can do that and make sure that that it's the right fit for you. So that's for the investment process. In terms of lead and following, your lead investor is the VC that usually gives you terms. You don't always have to put a valuation at an early stage, like we discussed. It can be a safe note. Safe is simple agreement for future equity, or a convertible note. But if it's a price round, the lead investor is the VC that's putting a valuation onto your company. And this often can round up other investors to come in and syndicate with you. And they often also represent you on the board. Sometimes at the very early stages as a board observer, but most times is a director on the board. And they can help you. They're usually the VC that helps you the most in terms of strategy, when to raise your next round, etc. So at Small World Group, we don't really have an ego about it. We invest in quite a few companies. Some need more help than others, and sometimes we come into a round at different stages of the round. So we like to lead, and we can give you the first term sheet, but we don't always have to. So we do both.
Thank you. Thank you very much, Julia. Maybe a question that you all got since last year is, did you do any investment in startups that you haven't met in person?
Yeah, we've even had companies exit, and we've never met them.
Whoa, great. Robert, Anders, is the same for you? At least for investment, not necessarily exits.
Personally, not quite. So we have been investing full speed last year, despite everything being remote. But I had met those teams I've then executed an investment with. I had met them before the lockdown. Sometimes very shortly. In some instances, it was just a very first encounter, and then the entire deal execution was remote. But 100% remote, I haven't seen it yet.
Okay, and Anders?
Yes. I used to have an absolute rule that we would never make an investment without meeting the team personally, but that's not so easy now. So, but you can still, I guess you can still establish a relationship online to some extent. But even though, of course, I hope it will be possible to do physical meetings, soon.
Yes, finger crossed for that. Thank you. So maybe now that we've seen a bit, like, okay, so what type of funds would be the best match? How does that work? Now being really down to earth is once I've identified the funds that I want to contact, the person within the fund or the people within the fund that would be the best match, that could be my champions. How do I contact them? Maybe Robert, what is the best way to contact you or someone else from B2B? Is it like cold email? Is it like a LinkedIn request? Is it get introduced by someone that you know? What works and what doesn't work for you?
I think all communication channels somehow work. The objective is you need to get the attention. You need to get your message across and hopefully a reaction. So if you achieve that, I think then it doesn't matter anymore which initial channel you took. Yeah, generally speaking, I think of course if you get introduced by somebody we trust a lot and somebody who we see like a first filter, somebody who would only bring us reasonable opportunities, that might help to get this initial attention. But honestly, you can go through our website and you will land on the screening meeting table. As long as your message is strong enough, as long as you get across something that raises our attention, it can be a complete anonymous approach without any intro. I think you just need to make sure you're being seen, you're being heard, saying the right things to raise attention and being persistent until you get some feedback.
Thank you. And so maybe Julia, so is it the same for you? And if it's the same, what makes the first message worthy of your time? Like what will say to you, okay, this I want to dig deeper into what this startup is doing?
Yeah, so it is the same. It doesn't really matter. If it's better if you have a warm intro, but you don't have to. You can contact me by email. You can contact me by LinkedIn. I prefer email because you can give me a little bit more information, and we don't have to switch from one platform to the next. But every way is good. I would say, what you need to include is. Well, you need to sell me. You need to tell me what it's about very quickly, make me interested. I like to know, the problems that you're solving, how you're solving it. And it can just be one sentence each, and have an ask and make it easy for me. Do you want to just get acquainted? That's fine. Are you looking for funds in the next 2 months? That's also fine. I just need to know what you're after because I get a lot of emails in my inbox. And make it easy for me. That's the best way to get an answer. Tell me I can meet on, at a few dates and times. That way I just check, I say yes, and it's done, and we can actually meet.
Thank you. And do you prefer to have like a slide deck attached to the first message or just like a first short message?
I prefer to have a slide deck because we get hundreds of decks per year, and the first screening is easier if you have a deck.
Okay, thank you very much. Anders, do you have anything to add? And if it's the same to you, maybe my next question would be, do you have any turn off, like something that an entrepreneur should absolutely not put in a message, otherwise you won't even go till the end?
Yeah, I very much agree with what's been said about this up until now. Turnoffs, not really. I think it's always good to. So number one, when you contact us or the VCs, try to do some homework first in terms of who you're talking to get the message more efficiently across. Maybe there is a link to maybe they've seen, if it's a cold email, maybe they have done an investment that is similar to who you are. And yeah, again, try to be clear, concise. What problem are you solving? How are you going to do it? And your asks. So yeah, and a deck is always helpful, of course. So
thank you.
I would
Yes.
add, it doesn't happen very often, but it's the best thing you can do is be very specific, even if you're concise. If you tell me, if I have an email that we've got the best technology and the best team ever, and you need to invest in us tomorrow, otherwise you're going to what you need enough. It doesn't happen a lot, but there's some elements of it. Sometimes, a lot of people have really good opportunities. Tell me exactly why, your technology and your team is the best.
Thank you. Robert, do you have anything to add on the do's and don'ts in the first message?
No, not much. I think you need to know what is special about what you're doing. It can be very different things, right? Sometimes it's the personality of the entrepreneur. Sometimes it's just a fundamental innovation from a very famous research institute. It can be a lot of different things you need to know. On the don'ts, I have a personal thing with slide decks that tell me the valuation of the round, especially if they go back to discounted cash flow models and telling me that the valuation for whatever reason is 120 million in the pre-seed round. That's not a good starting point with me personally. And
so maybe on that, so what do you expect to find in a slide deck? What are the key information that you want to have detail on?
Well, as been said before, what problem are you solving? How are you doing this? Have you understood the market you're serving, and how you're going to access those customers? Who is doing that? So your team and what's really good and strong about it. And anything you do not yet know and you're still finding out about or want to discuss with me, why not? You don't need to pretend that you know already everything. And I would leave things like terms and conditions and valuations for a early stage round for a later discussion. Of course, it might be a shortcut so that we don't waste time. If you know definitely that you need some terms and they will never change, you can play that and put them up front. But then chances are high that you're missing out on some conversations.
And maybe another question: what is your view on NDAs? Sometimes, particularly for deep tech startups, entrepreneurs don't want to share a lot of info without signing NDAs. I've heard investors having strong views against NDAs and like not signing NDAs, especially like right from the start, like before even having the first meeting. What's your view on that? Maybe Julia.
Yeah, we, at Small World Group, we look at 400 to 500 companies per year. So we definitely don't want to be signing an NDA with every single one of those companies. It's just too much to manage. And we see a lot of companies that are doing roughly the same thing. You have to do your homework on the VC, but you have to understand we're not in the business of stealing your ideas and going to do venture ourselves. So for the most part, we think that you can tell us about your business. You can tell us what's confidential and what's not. But usually there's a simple way of explaining things that that makes it that you don't require an NDA. And I would say we do sign NDAs when we're in the advanced stages of diligence, when we already know, we're 80% of the way sure that we want to fund your company and we want to talk to a specific customer, or we want to have access to a very specific piece of information that we understand is confidential. Then we will sign it.
Okay, thank you. And Anders and Robert, do you agree with Julia on that? Is the same for you?
Yeah, it's generally the same for us. We normally don't sign NDAs, at least not upfront. In special circumstances, we can do it. But I also think that, there's a lot you should be able to tell us to convince us that you are good at what you're doing before we need to see what's behind it. Before we need to sign an NDA and to get that information.
There's a sorry, unless Robert, you have anything to add. There's a question in the chat about the format of pitch materials, being slides or being others. We don't have to have slide decks, but that's typically good because it's short. It's 10 or 15 pages, and each page has a specific topic, and it's easy to go through. Written material is also good as long as it's short, because we can't read 100 pages on your startup as the first go.
I was just about to add regarding the NDA. We have exactly the same policy. We're in thousands of companies. We log in our deal flow. We can't sign thousands of NDAs, impossible. But we have no problem of signing 3, 4, 5 NDAs a year with those where we go deep. But on the point on making the interaction fluid and easy, it is much easier if the startup accepts our standard NDA. Then you'll just put it in place when you've reached that stage. There's nothing between us. Chances are we are seeing more startups and signing more NDAs with startups than the startup signing NDAs with investors. So for us, it makes our life easier if we can use the investor NDA.
Thank you. Maybe next. So once I've sent you a message, set up a meeting with you. What makes a great pitch, and what elements are you looking for during a first meeting? What are you looking at? The personality of the founder? Are you asking very specific questions on on the technologies, on some metrics? Maybe Anders. What's a successful first meeting for you?
Well, the first meeting is to basically get the first understanding about what the startup is doing, who the people behind are, what is the product. So to get an overview, it's nothing. I don't know. It's to, in some sense, get across the key points. So which again is, what is the core technology? What does it solve? Does it work? Who will buy it? Who's your market? And usually from that first meeting, comes questions. So we will follow up or ask more specific questions. But it's usually, we need to know a lot more and get a lot closer relationship than from a first pitch. So, I don't know if there's any secrets to how to do this, but I don't know. Don't oversell. Maybe be open. Yeah.
Thank you. I think that's the don't oversell. Do you agree with that, Robert? It's something that could be a bit different for deep tech entrepreneurs and for founders that are scientists. Sometimes they tend to be a bit more cautious with the results they have, for instance, about their technology compared to like non-scientist funders who are a bit more optimistic and a bit more like overselling their product. How do you read through that, and what do you prefer to, like, what speech do you prefer? Someone that's overly optimistic or someone that's overly cautious, or finding the right balance?
I mean, wishful thinking, I would love to see somebody who comes across as the CEO of a very successful startup, right? And I want to see the different aspects that can and may need to have. Generally speaking, I think be careful with these type of VCs like us. You can have a great technical discussion, and if you're doing interesting stuff, you can have a discussion for us which goes super deep and takes 2 hours. But that doesn't mean that you've sold your business idea to us. That means we had a great technical discussion and maybe we've learned something, right? So I think don't forget, this is of course about information exchange, and of course you need to trigger our interest in most cases with the technology. But this is much more. This is the beginning of a relationship, right? This is a sales engagement, a very long-term sales engagement, hopefully, if we come together. So so use those things as well and try to establish a relationship. Do things you would do in your sales meeting. That doesn't mean overselling, but yes, you need to portray that what you're doing is interesting, that there's a business, that money can be made, and that at the very end there is a huge exit and we're all going to be very happy. But also things like there's a chemistry to work together. There's an interest in both directions. You are a company that we can help to make even better. So there's a lot more than just the pure information exchange, and I think that's sometimes a challenge for very scientific people who just sort of bring across the content of their scientific paper. That's in most cases not enough. It may be enough if we get so excited about the innovation that we put everything aside, but in many cases it may not be enough. It comes a thing to my mind that a very experienced sales manager told me once. So of course take it with a grain of salt. But he said sort of this first sales meeting, this is like the first episode of your Netflix series. So first of all, never give away everything. You want to have a continuous exchange. You want to create curiosity on the other side to have a second episode, right? So don't overdo it, but think about those items.
Thanks. That's a great analogy. Julia, I saw you agreeing with what Robert said. Do you have anything to add? And if not, maybe one question I had is, for a first meeting, do you expect to have all the co-founders, particularly if you have like one scientific guy and one more business commercial CEO? Or do you rather have just one person, like just the CEO, for instance?
Yeah, so I did agree with everything that Robert said, especially about just a discussion about technology not being a sales pitch. We don't invest just on the basis of good technology. We need the business model to be there. We need to understand it. I find that often kind of the value proposition to your customers and the unit economics around your technology are lacking from decks and from presentations, and we need the team, to be there, because you're the best asset we can ever hope for, and that's just something that you create over time is a good relationship. Right. In terms of who I'd rather have a call with, for me, when I'm alone on the call, sometimes I'll bring in somebody else. You kind of want balance, so 1 or 2 people, usually the CEO and the CTO, or just the CEO, is my preferred approach. If there's 10 people on the call and I'm alone, it's just going to be a little bit overwhelming, and I'm probably not going to have a great discussion. A focused discussion, because I'm going to be expected to make everybody talk and understand who the team is.
Thank you. And is there, like, Robert Anders mentioned, like, do not oversell. You mentioned like all the the focus that you need to do, like not only about the technology but selling a product. Is there anything like something like a turn off from in the speech, in the content, or in the personality, the way the first meeting is happening, something that would just say, okay, I will not go further. Julia, you can go on.
Yeah, I mean, there's not too many turnoffs. You kind of click with some people and you don't with others, and that's totally fine. And you're going to be pitching to dozens of VCs, and you'll find your match. I would say maybe a turnoff is if you pitch like I'm not here. If you pitch like you're doing it with everybody else, take a few minutes at the beginning to get to know me personally a little bit. Ask me how much I know about the subject, about the technology, about the applications. It's annoying when you tell somebody, I really understand the value proposition, or I really understand the market, and then they spend 10 minutes explaining back to you what is so important about about it. You want somebody that listens and adapts, because those are going to be good salespeople, and that's what's needed. So, it's not a turn off set in stone, but just go into it as a conversation, not just a pitch.
Yeah, I guess that relates to what you were saying, Robert, as well, is finding a champion in the firm, is also having a good connection and personal connection with the person.
Absolutely. I'll put one on top, if I may. We don't like to invest in one-man shows, as we would call it. So if everything depends on one single person, that's not a good starting point, because we see a lot of risk in that, even if that's the most skilled person on earth. For us as a VC, that's a big risk, because that person might be hit by a stone. So get across that you're building a team, and that the skills of your team are somewhat complementary, and that you're actually seeing the team and working as a team. So of course we want strong CEOs, but there needs to be more than just a strong CEO.
Thank you. And Anders, do you have anything to add before we take the questions from the audience?
In terms of, so maybe a bit back to what I meant by overselling. Of course, we'd like to have people that really believe in what they're doing and have great products with great futures, but it's more about pitching. It's about maybe it's a bit like dating. So right, so you're trying to establish a relationship. So do not oversell it by, for example, being overly optimistic in sales forecasts or something like that. So
yeah, I would add, one of the best things you can do is give us small milestones that you might achieve in 3 weeks. If we talk for a few months and continuously you tell us that you're going to do something, and at the next call you actually do it, that's the very best thing you can do to get our interest. So we want you, like Andrew said, to have fire in the belly, to be really optimistic about what you're doing, but we also want you to have a plan and execute against it.
Thank you, Julia. Maybe it's also related to one of the questions, which also, what are the key metrics that you look for in a deep tech startup at a seed or Series A? Because we know that it's not you can have the same KPIs as for like more traditional tech ventures, digital ventures. So what are you looking for?
Is that for me?
Yes, for instance.
I'm probably going to need Robert and Anders' help here. It depends a lot, but we at the very high level, you don't need to sell me that the market is $100 billion. As long as it's big enough, it's big enough. Some of the key metrics is how long it's going to take to take off. If you tell me that you're going to have your first sales 5 years from now, that's probably too long. I think you need to show us the the value proposition and how much of the value you can capture, and make us understand that that's possible. It's very high level. I'm sorry, it's not specific, but that's what I can come up with right now. Robert and Anders have more specific metrics. Go ahead.
No, I cannot add the magic number, like it may be MRR in some software-driven business models. So we don't have this set of KPI written down somewhere. I think what we are after is validation, and that can come in very different shape and forms. Validation that your technology is possible. If you are already at a pilot stage or something, or an MVP, show us a validation that it works. And if you have already accessed the markets, even if it's only, I don't know, joint research projects or whatever, show us, give us validation that the market is really interesting in what you do and is willing to pay. So I would not, put that into a single number, but this type of validation can come in very different shape and forms. What I do look at, if you want numbers, is capital needs. So have you understood what your capital needs are? As Julia said, I think before, have you understood over time, by when do you need how much? And do you have a rough and somewhat realistic idea of your total capital needs? Because that will play a big role for how I see the financing trajectory of a startup.
Okay, thank you. That's quite interesting. Anders, you have anything to add? And maybe you have any specific example, had a question on the how to define the market traction. So Robert told a few examples, like any validation that you can have. Do you have any specific example, Anders, that you use or that you're looking for?
For market traction.
Yeah. For early stage, obviously early stage ventures.
Yeah, it's for really early stage ventures. I guess it's getting some solid customer relationships on board. I don't know if you can really talk about we usually don't do quantitative KPIs for early stage deep tech companies. It doesn't really make that much sense. I feel that's more for later stage investors, at least speaking for what we do. So I guess we're more interested in some sense more qualitative measures. So, and I'd like to add, I think Robin mentioned it, so capital needs is important. So it basically translates also to the scalability of what you're doing. And also it's important for us to understand as to whether you have any moats, meaning technical moats or other moats. How easy would it be for a competitor to copy what you do? That's something we spend a lot of time on. That could be, it could be IP, it could be, know-how, other things.
Thank you.
I can add a few numbers now, having thought through it. And it's not a real KPI, but it shows me that the person also thinks about the business model and the entire business side of his technology venture. Price points. A lot of people haven't thought through what the price point of their future product may be. Okay, it can change, but to have a first idea of what the price point is helps me to think about the relationship of customer acquisition cost versus initial cash flow towards me from your customer. Tell me something about margins, and about your own margins, and make a difference between gross margins and EBITDA margins. They don't need to be accurate. They don't need to be the real thing. But alone the indication that you're thinking about this sets you apart. from many of your co-founders in our deal flow, and things like margins in the value chain. So understand that your channel partners may need a business too. They're not only there to help you sell or a solution on a slide deck, but they want to earn money too. So tell me what their margins are. It shows me that you're informed about the market. So there can be quantitative stuff in the deck that makes a really good impression. It's not necessarily the one KPI, but the indication that you have thought about things and that you're thinking also about the business side.
Great, thanks a lot. We have a few minutes left. So the last question is from Therese from Spark Clean Tech. So she's asking, what about raising early stage money from corporate ventures, from corporates? And she's worried that we'll get the startup stuck with limited exit options. What is your view on that? Because I did a few other panels where some investors were thinking that is a great way to actually get your first clients at the same time as your first investors. But in the meantime, it's true that you could be kind of stuck with one actor on the market, which might prevent you to work with the competitors, for instance. So what is your view on this? Maybe Julia, if you want to go first.
Yeah, I think it's really important to work with corporates at an early stage because of what Robert just said. You need to understand exactly how you fit into the supply chain and what value your customers can capture and what value you can capture. And there is many more ways to work with corporates than there are to work with a VC. We give you money and we give you our time, but we can't give you access to a wet lab for the most part. At least Small World Group cannot. We can't give you, a business agreement. So you can have a material supply agreement. You can have a relationship where the corporate can become a channel partner. You can have a joint development agreement and develop a technology jointly. So there's many, many good reasons to engage with corporates very early on. When it comes to having them as an investor, there's definitely some questions that need to be raised. I think you need to understand exactly why they want to invest, and if they're going to be potentially your acquirer down the road. So just there's no wrong and right answer here. In some cases, it's good. In some cases, it might be a bit more concerning. I think you need to understand the ties that come with that relationship. Having a corporate as an investor, does that mean that they have exclusivity in any way on what you're doing? What else? Do they have information rights? Sometimes they can be more of a silent investor and they'll have a business relationship with you, but they don't even have to get information rights, meaning your financial results, quarterly and annual. But I think having corporate that adds value, that's on your cap table, also indicates that you have really good relationships with your supply chains and with your customers, and you can have more than one corporate, and that's typically a good indication, especially when you get closer to an exit.
Thank you very much. Maybe just one last question. So do you expect a board to be in place, and at what stage is it necessary to have a board? Maybe Robert, very quickly.
No, we don't expect a board to be in place, but in 99% of the cases, we will put a board in place because it's just our way of balancing out a good corporate governance, get for us the position we think we need, but also involve other people, independent advisors with a proper role, and not just somebody you call once a year, but giving somebody a proper role in a board. So we typically put that in place with the investment documentation we sign.
Okay, thank you very much, Robert. And so we're at the end of this session. Thanks a lot to all three of you, Julia, Robert, and Anders. It was very helpful, and I hope it was helpful to you in the audience. So the replay will be available, and the link will be sent to you in your mailbox, I guess, right after this webinar. Don't forget, if you don't know about it, that we have a webinar on the 13th of April that will focus on going international for deep tech startup during a pandemic. So right now, we'll have insights from 2 startups who actually went abroad last year, as well as insight from investors, from Headhunter, and this is organized in partnership with Choose Paris Region. So make sure to register to our newsletter, The Core, to get all the info on the next webinars. And the last thing I wanted to remind you is that we just launched the 7th edition of our Global Challenge, the competition for early stage deep tech startups. There's 150,000 euros of equity-free prize money, plus a lot of opportunities to get connected with VCs, with corporates, with the whole deep tech ecosystem to get a lot of visibility. And the applications are open until June 18th. So thank you very much again to all of you, and see you for the next webinar. Bye.
Thank you.
Thanks.
Bye-bye.
Bye.
Bye, thank you.